Hi, fellow traders. I hope everybody had a great day today. Well, I know it sounded like a broken record, but I hope you guys had a better day than I had. My day wasn't great. It wasn't good. It was okay. Any day that you're not red is a good day, but I think it was just okay. But I talk about that and something that I kind of discovered tonight, and something I'm going to be looking into as time progresses, but we'll share that with you. And after I do my trade recap, I am sharing the webinar that we did in chat today. I do a weekly education webinar for my yearly subscribers. Today I opened it up to everybody because it was a message that I really wanted everybody to hear. And sometimes I really I get these messages that I really feel need to be shared, and that's kind of what I did today. So just hang around after the trade recaps, and you'll be able to catch a glimpse of what the message I shared and kind of what we do every week, every Wednesday in chat. Alright, so let's get to the trades I took today. And this week I have disappointed myself in that I've missed two really good trades that I was actually in. Had ideas to actually reset, but just missed the boat. And like I said before, the boat's on the dock, but I step off the dock into the water, and then the boat takes off. I mean, that's just how bad things have been. But as I studied and I looked at this thing tonight, I came across something, and I'm going to show you here in a few, with this KR first. KR was the first trade. This was my number one focus. I said in pre-market when I was building my watch list, this was, my number one focus. So I got in on the 5-minute opening range breakdown and got a little move and took profit here. And then this recovered, and, I just took it off at break even, because once I take profit, I'm going to lock it in. And I could always get back in. But what I kept saying was I was waiting for this to hit the 20 moving average, because the 20 has been, king over the last couple of months. So in this case, you see this did hit the 20. So there should have been no reason for me to get in. Now, I never use the simple moving average on the intraday charts. I always use the exponential. So what I did was I flipped this to the simple moving average today. Well, tonight when I was looking at these trades, and look at what I found, look at what I saw. This actually hit the 20 and rejected off of the 20, which would have put me in this trade. No questions asked. But now this is what I was looking at on the other chart here. So let's change this to exponential. And there we go. This is what I've been waiting for it to pop up here and hit this. Well, in this case, we got the wick that went up and touched it, but this never did touch it. So, now I'm thinking, is this the last piece of the puzzle? Is this the last adaptation I need to make for the summer? Because this is exactly the move I was looking for. This is what I was talking about in chat while we were sitting there waiting on it. It never did touch this. I thought maybe we'll get another fake, reversal and go back and touch it and come down. That's what I've been seeing. When it doesn't get to the 20 moving average. So, this is what kept me out of this trade. Just waiting for it to hit the 20, and it never did. But now, I've kind of got an idea. So I'm going to have something to back test this weekend. I'm going to go back and look at all of my trades, and the ones that didn't set up the way I wanted it to, I'm going to go back and check and see, is it because I was using exponential, where simple is what's in play now. And these are the small adaptations you have to make. You don't change your whole strategy. You don't change everything you do. You just make these small tweaks for market conditions, and then you just go to work. So this was a small win, just $50 on it. But hey, if this was all I made today, if all I made was $50, if you were in the webinar I did for our members, I showed them where $50 a day is like $12,500 a year. So if you only did that for a year, and you're working full time, and you're trying to, learn how to trade, and you're trying to grow your account, that goes a long way, in doing that. If you can average $50 a day. And that's really not hard to do. It's not as hard as, you may think. Because what makes trading hard is we try to go for these big wins. We try to find these huge moves. And that's what gets me in trouble sometimes. And where I have $100 or $150 in the bank, and I turn around and end up not taking profit and getting stopped out for, $70, $80. And if I just take that and bank it, just imagine, $100 a day is what, 50 is 25 grand a year. So you have to think about it in that context. So let's see, the next trade I did was TJX, and this was my Achilles heel today. And you can see here, I never short into the 9. Never. I always wait. This should be a rejection of the 9. Okay, and you can see this kind of held the 9 and wrote it back up. This is the simple moving average. So let's go back to the exponential like I always use. There we go. This is why I took the trade. I took it based off the exponential. We rejected here. We rejected here. We rejected here. Here's a candidate showing weakness. And it made a lower low. So I got in. We did get a little move to the downside, but then we recovered and pushed back up. So this was a solid setup if you look at it through the lens of the exponential moving average. Now we'll flip this back to simple. Doing it wrong. Simple. And now look at it. Should have never been in that trade. Never. And ended up stopping out way up here. I was holding it because I was waiting to see if it tested VWAP. Well, I was looking at it on my Thinkorswim charts, and on Thinkorswim the VWAP was all the way up here. This is where the VWAP was on Thinkorswim at 37, around here. So we were a little over 10 cents off. So that's why this looks a little crazy. You know, this cover like I waited too long. But in all actuality, I didn't. So I don't know why the VWAP on this chart was off. You know, every now and then I do find them that are a little bit off. But it just seems like I was having an issue, not so much an issue with charting, but the studies. You know, it was reacting to a different set of studies. So I ended up stopping out here. Got back in again, in which I thought we were losing this. Remember, the VWAP was up here. I thought we were losing it. We're losing the 20 and looking for the move down. But we did get a little move down, but not enough to take profit. And so ended up, stopping out again. So not bad. I think all in all, with both stop outs, it was like $100. Let me see. Yeah, 116.97. So 117. That's all it was. And managing, and what's saving me is managing my trades. Not taking huge losses, and it allows me to come back and stay green on the day and not take drawdowns. While I'm trying to figure out where I need to make these subtle adjustments, I'm still green. I'm still adding a couple dollars here and there, and I'm keeping myself in the game. Now, the last trade I took, and this isn't a typical trade for me, but this is how I like to trade news plays. I typically wait for the news to settle or the market to digest the news, and I take a secondary move off of it. Well, in this case, we had a nice candle to run up. I actually had time to vet this and to figure out where the support and resistance levels were. So in this case, we had one at 53.97, which was, right in here. I'm about a cent off. Right in here. And then we had another one at 54.75. So I was able to actually build a trade plan here in the time I was waiting for this candle to finish and then this candle to open. Then there was another level I had up here, see, 55.09. See if I can get that on this chart. Well, close enough, 55.08. So this was the next level. So typically when you get a big candle to push up like this, you're going to get the next candle to either base and start to make a move up, continue up, or you're going to retrace half the candle. So I waited for this. This opened here, pushed up a little bit, but I wasn't convinced with the price action. It started to pull back, and I thought we were going to retrace, back to the 80s. So that's where I was looking to get in, but it didn't get there. It kind of bounced on this level here, and so on the way back I went ahead and got in because I could use this level as my guide. If the next candle opened and we sold off and closed below this level, I would have taken the trade off. But instead, we got a nice strong move up to my first cover point. So I was able to take some here. This candle didn't quite make it. It came close, but I had it at 55.05, which I felt, was close enough, but we couldn't, just barely missed it. And as we were rolling over, I went ahead and took it off because I thought we were going to pull back to the 9 here and then start coming. So let's change this 9 here to exponential. and see how close it came. See, it just made it a little bit closer to it, but still we never did pull back far enough, and it did eventually make the run up here and tap 5508. That was the move I was looking for, but it just wasn't any range here for me to trade this. This was only about 20-25 cents if I got back in. You know, I needed to still be in from my entry back here for this thing to really make sense. So, you know, I'm not mad about this. I did exactly what I needed to do based on the price action. I made the exact right decision. I executed my plan and everything worked out. So this, you know, I was in smaller size, obviously, because this is a little bit more riskier play. Yeah, I could have taken twice as much size and made twice as much money. But, you know, later in the day, there's not a whole lot of volatility in the market. So, you know, we got to stay small. And ended up getting a nice profit on this. So, you know, all in all, it was an okay day. You know, 2 times this week, I really, you know, dropped the ball. So those 2 trades would have allowed me to make $1,000 a week at least. You know, I like to make at least $1,000 a week. I mean, I don't have that goal in the back of my mind when I'm trading. It's not something that I think about. You know, it's what I would like to do. But probably won't get there this week, and that's fine. I'm kind of identifying some things that I may need to change and that I may need to look at, you know, to help me make sure that I get the moves that are out there and available. Because the day was a solid day in the morning. It really should have cleaned up, but didn't. So that was my day in a nutshell. Like I said, I'm gonna be experimenting in the simulator this weekend with the simple and the exponential moving averages. I'm gonna go over some of the trades that I either got shaken out of or I didn't take because it didn't hit where I wanted it to, or my moving averages weren't quite where I wanted them to be, and just kind of take it from there. So you guys have a great night, and if you want to hang around after this, I'm sharing the webinar that we did in chat today. There's a pretty strong message, I feel, for some, you know, newer traders. So, you know, if you want to check it out, or you can just come back later and listen to it. So have a good one, guys, and we will see you bright and early tomorrow morning. All right, hey guys, how's it going? I hope you had a good day today. The market was pretty good. I mean, this morning it was pretty solid. You know, it did slow down. You know, it did put the brakes on after lunch, but it's pretty hard not to blow up. Don't know. I don't really look at that until the end of the day, when I get ready to you know, go over my trades. You know, I don't look at my P&L anymore until the nighttime. I don't want it to like influence any decisions I make throughout the day. That's what was happening before. You know, I was looking at it because I was posting it, but I would look at it and say, well, I need, you know, if I was down a couple of dollars, then I would try to look for a trade that I could easily make something or if I was close to making a goal, I would, or a number, psychological number, then I would try to find a trade and hit that, and that's what was messing me up. So don't even want to look at it until after the fact. Yes, I am. Can you guys hear me? I mean, my volume icon and everything is okay. Great. All right, great. So we're going to change it up just a little bit. We'll talk about some trading here after this message, but there is really a message that I want to send everybody. And you guys that are in the room, I know you're receptive to it, but I kind of want to drive it home because it's going to mean a whole lot during this time of the year. And I have some traders that really don't understand this. And I've tried to work with them and I've tried to do everything I could, but they don't get it. But I want to share it with you because this is part of my aha moment that I had through this process. So I want to share that with you real quick. The main, and the whole point that I want to make today is that you have to be wired differently. 99% of us are not the person we need to be successful in trading. I mean, we're just not, because it goes against human nature. And there are things that I had to do to help me understand and to get to the point that I needed to be. And the first thing I look at is I'm only as good as my last trade. I can't come in the market every day with the thought that I could live on past results. I've done well in the past. I've done good. So, I'm going to nail it today. I have to look in the mirror and say, hey, I'm only as good as my last trade. And, for some of you guys, that's the way you see it. And there's absolutely nothing wrong with it. That keeps you honest and that keeps you, on your toes. Is that if my last trade is bad, then everybody's going to think I'm crap. So I need to make sure I manage my trade and I do, exactly what I'm supposed to do or what I say I'm going to do. And I also look at it as, the opportunity today can be my last opportunity. Because even though I know the market is open every day, and that there's going to be another opportunity tomorrow because it's open. But if I don't lock in and I don't follow the process, I could blow up today and there'd be no tomorrow. So you have to look at and approach today in each trade as, this could be my last trade. So, I better damn well follow the process and do what I'm supposed to do. And if I'm supposed to stop out at a certain area, then that's what you better do. Because if you don't, there might not be a tomorrow. So I have to keep myself honest and humble and say, hey, look, I'm only as good as my last trade. If my last trade was garbage, I managed it wrong, then that's who I am and I need to fix it. So I need to get back in, and do what I need to do to make it happen. So I look at it as, I have to prove myself every day. You know, because the day that I become content and the day that I stop looking at myself in the mirror and trying to figure out, what it's going to take for me to get better and to grow as a trader, that's going to be the day the market finally catches up and defeats me. And that's the way all of you guys need to think. Because I've talked to a couple of you, and there are a couple that aren't in here, that they have trusted, believed in this process. They started making a couple of dollars and they kind of got comfortable. And they stopped focusing. They stopped putting the effort that they did to get to that point. They quit putting that effort in. And they quickly found themselves losing that consistency that they worked so hard for. And believe me, if you do that, it really puts a knife in your back. And it's hard to, come back from that. That you work so hard and you're making a couple dollars a day and you're consistent. You're not having, red weeks. Because it's about one trade at a time, one day at a time. And if you focus on winning each trade, then you're going to win the day. If you focus on winning, then when you win the day, the days, you win the weeks. And when you win the weeks, you win the months. It's just like a domino effect. But it's a good way. You're not building yourself down, you're building yourself up. So I have to come in the market every day, focused on every trade like it's my last one. Leo, he jumped on the back of my chair again. So he's watching over me. All right, another thing, and this is what I see a lot of traders do. I had to stop looking at myself as a victim in the market. I stopped waiting around for good things to happen to me just because I made the decision to get in. It's like, when you first start, you're kind of skeptical about taking trades, and then now that you took the trade, you're expecting good things to happen. And I was just trying to wait for good things to happen. And that's not going to cut it. I work. I study. Last night I sat through a 2.5-hour webinar. All to try to get better and to help refine my trading in different markets. So I never stop studying. I never stop learning. And yeah, my learning is more focused now because I'm not just going to listen to any and everybody's webinar. It's going to be focused on what I feel is going to help me and that works with the way I trade. And I do everything in my power each day to become a victor and not a victim. And, I work on creating a culture of success. And that's what we have to do. And that's what I want to do, in the room. And success, we often equate success with winning. And, that's a logical thing to do. But we can be a success and lose at the same time. Because losses are an integral part of trading. But if we lose correctly and we lose according to our plan, we're going to be successful, because that's going to allow us to come back and have a good day. For 2 days in a row, I got stopped out twice on one stop. And because I stuck to my plan, I stuck to my rules, I stuck to my stop, I was able to come back and end up green on the day. And, it's all because I'm focusing on not becoming a victim, not sitting here blaming everything, finding things to blame. My chart was off, and I'm not going to blame the chart. I'm not going to blame DOS. The fact is, I have two different charts, two different charting platforms, and one I know is more accurate. So it was my fault that I didn't go back and look at the most accurate chart, because I never would have been in that trade had I watched the right chart. But it's nobody's fault but mine. I can't. It's easy, and it's in our nature to want to blame something so that it makes us feel good. But that doesn't help us in the long run. We have to accept responsibility and not become a victim of all the excuses that we can come up with. So I have to stay away from low self-esteem, doubt and fear. These things can creep in on us at any moment. And in the Saturday day trading class, we started the trading psychology part. And we're going to cover this extensively, because these things are kryptonite to our trading, and we have to know how to deal with it. And that's why you'll see me, if I get frustrated or if I'm not happy, I'm going to take 15 or 30 minutes and walk away, walk outside, or ride my bicycle around the block. Because I know and I can feel when these things are creeping in, and I need to reset myself. And all professional traders do just that. When they feel themselves out of control, and they don't feel that they have this level of control over what they're doing, they have to stop. Because, in a lot of cases, they may be trading, they're trading their own money, or their job is based on their performance, and they have to stay at the top of their game. So these are things that can creep in, and really put a dent into our trading. Okay, another thing I do is I make a guarantee to myself that I'm going to do what it takes to be successful. The 2.5 years or so that it took me to be able to walk away from my job and do this full time, I had to decide that I was going to do whatever it took. I got tired of going to a job that I didn't like, but I had to, because I had to make a living. I still had that responsibility. But I realized I was going to do what I had to do to be successful. And if I can't honor the guarantee that I made to myself, how can I hold other people accountable? And this kind of brings up another issue that I've had. We've had a lot of people come through the room, and there's been about 40, I guess, that started, did the monthly, and then decided they didn't want to stay. And some were mad because I didn't give them alerts all day. Some were mad because I couldn't make them successful. And what it boiled down to was they weren't holding themselves accountable. They were holding me accountable, but they weren't holding themselves accountable. They weren't doing what they needed to do to be successful. Some students I mentored, and I would give them things to work on, and the next week they never worked on it. But it was my fault, because I was responsible for help making them learn. So when I told them, look, how can I do for you what you won't do for yourself? It doesn't make sense. So I had to make sure that I held myself accountable. That I couldn't blame the people that I was learning from. I couldn't blame the videos that I bought and saying that, this isn't my style. Hell, I bought them. I can't blame my lack of success on anything but me. And I have to go out and hold myself accountable and make sure I get what I need. Now, if I'm doing what I'm supposed to do and you're not doing what you're supposed to do, then I'm going to call you on it. And it goes both ways. So the key here is you have to make a guarantee to yourself that you're going to do what it takes, whatever it takes. And if you can't honor that guarantee, you're probably not going to get to where you want to be. So when you get to the point where you can look at yourself in the mirror and ask yourself these hard questions, until you do that, you're letting yourself down. You're letting you down. You have to ask yourself, am I making the time to study? Am I putting in 120%? Am I putting in that 120? That's what it takes. Am I taking responsibility for my own results? Or am I blaming somebody else? And until you get to that point, you're letting yourself down. And you got to remember, nobody owes you anything. I don't care who you gave $5,000 to, or $7,000 or $10,000 to. I mean, the guy who I did his webinar last night, he's selling his thing for $20,000. So some people are crazy enough to pay that. And most of what he teaches is, on the internet. But there were a few things that I got from the webinar that helped, that I could take and just kind of, bring into my process. But the thing is, when people pay him that money, then they expect him to make them successful. But the key is, you owe yourself. Regardless of who you pay, regardless of who you hire, you got to look at yourself first and understand that, you owe yourself. Yeah, Ross. I can't remember the guy's name right offhand. This was the first time that I listened to, one of his. All right, so you have to be wired differently. Because, think about it. You could be average, you could be good, or you can be great. It doesn't take anything to be average. We're average right out of the box. And it's not that much more work to be good and to go from good to great. It just takes trusting in the process and not taking days off. Unplanned days off, put it that way. When you build your own training schedule, you're going to have days that you're going to have to commit to. And if, Friday night is your family night or your date night, then no, you don't expect to do anything that night. But if you have Saturday mornings, if you say, okay, I'm going to get up at 6 on Saturday morning and I'm going to spend 3 hours in the simulator, before I start doing my yard work or whatever, then you got to do it. You got to get up out of bed and you have to study. And you can't take days off. And when you get in a trade, when I mean no trades off, I mean you can't get in a trade and take that trade off. Once you get in it, you got to be locked in, and you have to be ready to execute. There's no two ways about it. You have to be ready. You have to be locked in. You got to be ready to execute. All right, so the last thing that I want to share with you guys is, my number one priority is working with those that have a small account. But even if you have a larger account, if you have been unsuccessful and you haven't been able to be consistently profitable, because having money doesn't necessarily make you more profitable. It just makes you just have more money to lose, is what it boils down to. So you have to think about, the very first thing you need to do is you need to be profitable. Whether it's $5 a day, $10 a day, or whatever, you need to be profitable. And I know that, that's a little bit far-fetched. You want to have more than that. But I want you to look at this. If you made $50 a day, and if you want to have a monetary goal, then, set $50 a day. If you make $50 a day, how much is that a year? $12,500. If you're working full time and you could add $12,500 a year to your salary, and really to help boost your account, if you only did that, how many of you would be happy with that? A lot of guys are not even making $50 a day. They're losing twice that a day. And you have to look at it in context. You have to look at it in context. $50 a day is $12,500 a day. Okay, hey, what about $100 a day? We can make $100 on our first trade every day. And we can easily make $100 a day. That's about 25 grand a year. And then look at $200 a day. And then $500 a day. I mean, it's not that difficult to get there if you start small, you develop the process, and follow it day in and day out. Hold yourself accountable. Don't get complacent. Don't get lazy. Don't stop doing your work, your homework. Don't stop doing your trade journals. Don't stop just because you're starting to make money. And that's what happens. And that's what I mean, by you have to stay locked in. You can't just stop because you're starting to make money. You have to continue doing what you did to make you successful. Because journaling helps you get better. It helps you get to the next level. Studying. Never resting on, where you are. And yeah, Bruno is right. Making video, you can make a video blog of your trades. That's what I started doing. That's kind of how all this got started. I was making videos. Really, it was for me. I was talking to myself, and then I wanted to get feedback from other people, and I started getting feedback. And that's where this all started. Was making. Well, really, it started first with me doing my blog, the written one, and then the video blog. So, no matter how you do it, you really need to take this on. You need to have a trading journal, and this is how you're going to get better. Because we're going to make mistakes, but if we journal them and we write it down, then it's going to stick to us a lot better. Listening to it, or somebody giving it to you on a piece of paper doesn't really mean much. But when you take a pen and you put it to paper and you write it down, there's a whole lot better chance of it sticking with you.